Did we miss the bottom? So this video is really about the stock market, coronavirus crash, and whether we missed the bottom. And I'm sure this is a question that are in a lot of your minds right now because the market went up by 10, 20%, even 30%, depending on which stock you are looking at. So I've been paying attention to the news recently because I want to see what everyone is thinking about the stock market and whether we're at a bottom. And so far, I have found a ton of news that, the market went up by 20 something percent and the economists are scared of calling it a bull market. Goldman Sachs saying it's not the bottom yet, and other hedge funds that say, we're still bearish about the market, so we think it's going to go down. And I think, they are reasonable. I think I can see from their point of view why they think it's a bottom, and that's a V-shaped bottom is actually quite unlikely. So as of I'm recording this video right now, the market has went up quite a bit, and in the next 2 weeks is going to be the earnings season. So let's talk about what are the possibilities. And I actually go through this in quite a bit of detail within my program Investing Accelerator, but I'll also share my thoughts here. So first of all, there are two main possibilities. Now, some people will say there are three possibilities, but I think there's mainly two. The first one is a V-shaped bottom. That means it dropped, and then it's going to come back up really sharply like a V. The second one is a W-shaped bottom. So I can't really do it with my hand here, but it's just kind of like this. It dropped quite a bit, which already happened, comes back up to kind of midpoint, or a little bit lower, drop again, and then it goes up eventually. And the last one is kind of like the Great Depression, the Armageddon version, where it dropped and it just becomes an L shape and it never recovers. So those are the three possibilities. I think the third one is quite remote, but don't quote me on it. I mean, if we're heading into the Great Depression, then hallelujah, God save us. But what's important here is actually you want to evaluate the probability between a V-shaped bottom and a W-shaped bottom. And here's what people think. For people who think that it's going to be a W bottom, their main arguments is because, well, a lot of people are being unemployed, which I totally agree, and that's going to have a long-term impact. B is that right now, a lot of people are missing their mortgage payments. A lot of people are going to default on their loans, so that's going to have a huge impact. C, consumer confidence is not restored yet, and it's going to take a while for consumers to become confident again in the market, so then there's no way it's going to just come back up like this, like a V. And I do understand that as well, and probably D is some sort of default or loan, or some of the banks are failing, or the commercial real estate market is failing, or the real estate market is failing altogether. All four factors that can feed into a W bottom. And a W bottom meaning that right now we dropped, it came back up a little bit, right? We're before the earnings season, and it's going to drop even more. It's going to drop past the previous, low, and then it's going to go down, and then eventually it's going to come back up. To a certain degree, yes, that's what I think have a high likelihood of happening, like 65% chance or 70% chance of happening. But at the same time, I also see the other argument. And the other argument is the V-shaped bottom. Now, when you're looking at a V-shaped bottom, it means you're expecting a very, 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 very sharp recovery. Now, I already see that in some of the stocks on the market today. For example, biomedical stocks, V-shaped bottom, no doubt. Now, what needs to happen in order for the market to have a V-shaped bottom? A, there needs to be like a very strong push in the market. For example, like the stimulus from Feds. $2.3 trillion as of the day I'm recording this video. Number two, the economy needs to restart very quickly. Now, when you look at the coronavirus crash, obviously it has led to a lot of infected people, a lot of death, but then infrastructure-wise, people-wise, we're still largely the same. The key difference, or the reason why the economy is slowing down, is because everyone is staying indoor. So if somehow everyone is suddenly okay with going outdoors again, then that might lead to a very fast restart of the economy. Now, if you look at China, is that really happening right now? Not really sure, so we'll have to see. But then if the stimulus is so strong that it overrides all the other things like bad earnings in the short term, then that pretty much leads to a V-shaped bottom. And right now, the policy for stimulus is basically unlimited buyback. So then that's why I think there is a possibility for a V-shaped bottom. And what I want to cover for the V-shaped bottom or a W-shaped bottom is really for people who think that the market is going to drop, go back up a little bit, and drop even worse than before. My question for you is, well, if a stock already dropped 70% and it went back up by 10-20%, do you really think it's going to drop again past the 70% mark? And if this company is a great company that grows year after year with strong amounts of cash, with strong financials, do you really think the stock is going to drop past the previous low? I think the probability there is pretty low. And I think that's why you need to look at the market instead of as a whole, but one by one as a stock. And here's what I mean. If you go to the market today and you kind of filter for biomedical stocks, stocks that are directly related in fighting the coronavirus, you're going to find that these stocks barely dropped or they have recovered already. And I think that's very important because that is a V shape. If you look at stocks that are heavily impacted by the coronavirus, like retail, like airlines, then chances are you're going to get a W-shaped bottom because it's going to take longer for these companies to recover. And I think that's crucial because once you look into specific sectors, then you can see clearly on what you should do and how each individual stock is going up and down. And that will give you, as an investor, an advantage. But either way, as you are investing in the market, you need to be prepared for both because a V-shaped bottom can turn into a W-shaped bottom. So as an investor, you should have a plan for both in place. So in case a V-shape does turn into a W-shape, you will have capital to invest when it is cheap. So then you can kind of lower your costs overall. So that's what I really think, when we're talking about the bottom. And I think, the worst has passed, the peak fear has passed. And for stocks that is on a deep discount, the bottom you see is probably the lowest it will go. And right now going forward is going to be an uptrend because of stimulus. But then it's going to be quite a bumpy ride. So that means lots of opportunity for you to get into the market, especially if you know which stock to focus on. So that will be my 2 cents and my opinion. Now, obviously, it's going to depend on the type of stocks you're investing in, your researching skill, and whether you know how to multiply your profit using options or any other advanced strategies, and so on. So my name is Eric Seto. And my goal is to help people without a financial background to master investing, target 30% using an hour a week through my own investing strategy. So if you're interested in learning more about my investing strategy and how I multiplied my return during this market crash, then you can click on the link below, which will take you to a free case study called How to Get 30% from the Market. So after you watch the webinar, which I packed a ton of value in it, you can click on the link below to schedule a call with me and we can have a chat to see if you are a good fit for the program, Investing Accelerator. So that's pretty much it. Let me know what you think of the bottom. If you have entered successfully at the bottom, which is at very low price, you should be up 10-20%, if not more by now. If so, congratulations. And I'll see you in the next video. So thank you for watching and I hope you enjoyed the video. Please help support me by subscribe, and you can watch the next recommended video here as well. So I'll see you in the next one.